Welcome everyone to the Kindle Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Yesterday's action was once again dominated by the algorithms as they came in as a big seller on the market once we peaked out early in the session. On yesterday's market grid in the futures, 34.14 was R1. We hit 34.14.25 and reversed and traded all the way down to an S3 number as a major reversal happened. Now, I discussed the possibilities of the markets retesting the lows before we could go higher. Now that we've retested lows and in fact made new lows, there's some other considerations that are coming into play. Now, overnight, we're seeing quite a bit of strength as the market's rebounding, and I'll talk about all of this in the technical section here in just a few minutes. But the primary thing that's happening here is we're seeing a substantial breakdown of the internals of the markets. As I've discussed, our short-term database has now dropped to 14% bullish, and we're continuing to see this mass liquidation almost to zero. And this is the type of action we've seen in 2020, where everything goes to extremes. In tonight's technical section, I'm going to review some analysis that I did back on April 30th. And all of a sudden, this is becoming very relevant. It's not so much the price objectives that I talked about, but the structure of the market. Now, as you know, I've been overall very bullish. Our intermediate database has a lot of traction, and I still am generally bullish. There are some substantial elements starting to emerge that are suggesting that we could see a much deeper decline than what we've seen already. Now, there was likely to be some consolidation over the next couple of days, but this market is so volatile and the machines are running so heavy that anything is possible from this configuration. As you know, we exited a lot of symbols last week. We went to 100% cash starting on September 3rd and 4th and continued to move into cash as we came into this week. We are now 100% in cash in many of the major ETF strategies on a short-term basis. One of the other things that have happened, just about every major stock that was leading this market has failed in its pattern. Now, I'm not going to cover these tonight, but Apple, Microsoft, Amazon, Netflix, Google, they've all broken down. And this is a substantial breakdown, and they're all indicating that they're going to go to the 21-week moving averages. So you can pull that up on any software and get a simple 21-week moving average, and you're going to see where those numbers are. They're substantially under where we're currently trading. The equity markets from an index viewpoint are also at a very key moment, and we're already seeing some breakdowns just with the weakness that we saw yesterday. That's in spite of the rebound that we're seeing overnight. I would discuss in the technical section the exact close that's going to be critical for us to remain above, or we could see some substantial declines over the next 2 to 3 weeks. We're sitting right on the edge, and if we close below some of these numbers I'll discuss later, we're definitely going to see more weakness and more downside in this markets. Yesterday I talked to you about the claims numbers. They came in as expected around 850, actually came in a little less at 813. The big number, and I've been focusing you on this number, was the continuing claims that upticked about 91,000 to 13.38. This is the first increase we've seen for many, many weeks. This also falls in line with what I've been telling you is the September metrics that we're going to see coming out of the economy are going to start to miss expectations. They're not going to come in better than expected. And that's exactly what we're beginning to see. This is going to continue and get worse as we go into October. We also got PPI that came in as expected at 0.3. I do not expect anything to come out of the CPI that comes out today. It's also expected to be up 0.3. I don't see anything material there. I don't believe market participants are actually focused on inflation at this moment. Down the road, that's going to become a significant story, but that's probably not until sometime in Q1 or Q2 of next year. We've also been watching on the fiscal side that they can't seem to come up with any type of deal to continue to stimulate the economy, and that is significant. I haven't talked about this for a while, but don't forget the Fed. They're still lurking in the background, and I think they will come in and put some programs together if they get concerned. It's obvious that the legislature is not going to be able to do anything. These guys can't make a decision, and I actually don't think they want to make any decisions until after the election. So there's a bit of a game being played here, no doubt, and we'll see how that plays out. A lot of folks talk about the plunge protection team, and they're probably out there, and they'll make some announcements if things get out of hand. But I believe there's quite a bit of downside that can occur before they will step into this market. We are at the most critical phase since we started this V bottom going back into March. I will cover the key numbers that I believe are going to trigger the markets into a next level sell-off that could be as early as tomorrow's close. As we come into next week, market sentiment is likely to continue to deteriorate. There's very little, it seems, that's going to be able to stimulate back into a positive sentiment, especially with these major stocks starting to implode a bit. Now, they're very close to some support, and we're likely to go into a trading range for maybe several days. But make no mistake, these stocks have topped out, and it's just a matter of how wide the trading range it sets up or how deep the correction goes. And that's a little early to talk about right now. Most likely the first time I'll get a chance to talk to you about this will be at next Wednesday's live stream. If something happens before then, you folks know the strategy. I will light the screens up if we get into some crazy stuff, even on Monday or Tuesday. It doesn't matter when it happens. I will come live and cover all this action. So let's go ahead and take a look at the charts and see what they're telling us for the end of the week and what might set up for the beginning of next. Beginning with the review of the WaveTech database, on a short-term basis, we continue to see a lot of liquidation. There was about 700 sells and only 110 buy signals, giving us a negative ratio. Even when we were at 17% yesterday, we're now down to 14.58% bullish. This is one of the lower levels that I've seen on this. Have seen it down at around 8%, but this is a substantial liquidation. Over the past month, I've been talking about this liquidation of the short-term models, but this was not what I was talking about. This is a significant change in the database. There's only 2,410 symbols long right now, and a bunch of these are mutual funds, which don't even matter. There are not very many individual equities that are long in the system at this moment. There's not much more that you're going to derive from what I've just told you, other than we are at an extreme on the downside. I discussed last night, if we remain under 26% for the next couple of weeks, that is also telling us there's going to be further downside in the markets. As I mentioned in the opening comments, we are at a critical juncture in the markets. One of the things I'm expecting to see on the intermediate database or the weekly signals is some liquidation here. Not a substantial amount, but there's likely to be some selling that comes out of this collapse in prices that we've seen. There's likely to be some selling in this now that we've seen a substantial collapse in prices. I also mentioned in the opening comments that our short-term models, this is our global equity strategy, it is actually 100% in cash and started selling last week. I want to show you a couple elements because this is exactly what you want to be able to do. The current drawdown is 6 days ago is 1.7% of its all-time equity high. You'll see in this table here that it's 100% in cash. So it has no exposure in the markets whatsoever, and it's likely to stay like that until we see this rotation that I've been talking about in the short-term database. You can see exactly what was sold. On 9/1, we sold IJR, EFA, EEM. That moved the strategy to 60% cash. Last Friday, on September 4th, we saw the MDY or the mid-cap get sold out. Did see a sell of SPY on the 9th. So we're at 100% cash. This thing is completely protecting the equity that it's made over this run. And it's up about 12% on the year now. And these are broad-based ETFs. This is a significant event from that standpoint. The reason why I show you this is why the short-term rotation is important, because you want to be able to preserve that capital. Taking a look at the spread charts that I've been talking about, the spreads are continuing to be very stable. I still expect to see the Nasdaq be weaker overall during this period of time, starting with the Dow Jones, then the S&P, and it goes all the way into the mid and small caps. And what the point of showing you the screen is you can see that the ratios are starting to change. Now, the very last one here is the ESU against the NQU. You can see we've got a nice bottom here on this spread, and I expect this to continue to move to the upward direction, meaning that ESU or the S&P will outperform the Nasdaq, and this is the futures. As we begin looking at the S&P futures, we are seeing about a 3/4 of a point rally right now, traded back to 33.54. There's some key levels that you're going to need to watch. The 40 period moving average is 33.49.51. I discussed that in yesterday's commentary, as that is going to be a key support number. We spiked under it yesterday as we traded down to the 33.16 level. But now we're trading back above the 40 period moving average, 33.49.50. Last trade, 33.54.25. But if we close below the 33.49 level today, that's going to indicate that we're going to continue to move down in the grid. And I want to use the cash markets to show you what the possibilities are from both the short and intermediate basis on the cash markets. That the futures are likely to set up a range and maybe trade in the grid, but the key thing to watch here is that the 10 period moving average right now is at 34.25. Average is dropping at 0.41 ppm1, suggests that there's only a 40% probability if we were to rally back there that we would get above that number. So that will be a sell point. As you look at the market grid for today, you can see that the resistance here is right where we're trading right now, R1 33.57.25. Maybe we can trade up to the R2 number 33.87, but there's going to be a ton of resistance up here, and the only thing that will matter is that close at that 33.49 level. As we review the cash S&P, there was a sell signal issued on the 3rd of September. It's actually short. It was long. This is a 1-2 sell. It's currently short. We closed below the 40. We're obviously going to rebound based on the futures activity overnight, but you can see that the grid is starting to slope down. And as we look to the market grid for tonight, we're looking at the 33.55 is R1 and 33.73. That is going to be the peak levels that we're likely to hit today. I don't think we can get anywhere close to R3 or RXT. And the key things to watch for, as in the futures, is that 40-day moving average. It's 33.54.89 on the cash. It is basically flat, very close to the number when we start trading tomorrow. And a close below that level will suggest that move down to some lower levels. The weekly cash market here is very significant, and I'm going to go through the futures. I'm going to bring up the analysis that I did back on April 30th, and this will be important to understand from the standpoint of a structural standpoint. This has been eating at me for a while because we're not seeing certain elements for this to be an impulse sequence, and I'll go through all the details here in a minute. But this reversal that we had last week was significant, and now we're pressing down at the lower end of the grid. The low this week has been 33.29. I've talked about this in detail over the last couple of videos. S3 33.30. This grid is going to slope down when we come into Sunday night's video. I'll cover this, but we're definitely going to see a slope down, and there's going to be some further probabilities to the downside. Now, I mentioned all the major stocks that have failed, the Apple, Microsoft, Amazon, Google. All of these stocks are setting up just like the S&P, that we're going to most likely head toward the 21 period moving average. And there's a couple things going on here that I want to point out. This is 100% WaveTech Analysis. This is part of the theory, is we're seeing the PPM 1 has crossed to its first and second derivative. That's a bad sign. Tells us there's a probability, at least for the market to go through the 10 period moving average. That 33.29 is the 10 period moving average, also the low of the week. So this number is likely to be challenged. If we did close today under 33.29, this would be significant. It would tell us the next stop on this market is 31.53, which would be the 21 period moving average. I mentioned the stocks, the Apple, Microsoft, and so forth. If you look at those charts, you will see they are all likely to head to the same point. All of these stocks have such a major impact on the index that it's going to pull everything down to this point. The issue that could come out of this is we could see something bigger start to set up. Now, as I've talked about earlier, I am bullish as far as the longer term database go. I also mentioned that everything has went to extreme when we were down into March, and now we've seen the extreme here in September. So the markets have made moves that we normally would see possibly a year and a half or 2 years to take, we've done in 6-7 months. So this whole pattern is setting up here could actually expand and get very volatile, trading down toward the 21 and possibly going down to the 40-week moving average, which is also very similar to the 200-day moving average. So there is building a probability that we could decline down to the 200-day moving average in this pattern. Now, this is one of my worksheets that I did back on April 30th, and I've showed you this before. But the significant thing that I want to point to, there's a couple elements actually, that I had here weekly, A equals C at 35.29. Now, we traded to the 35.84 level. We went through this by a little bit, but the point of this is that I had A equals C, and I told you in the opening comments that it's about the structure that is important, not necessarily the price target. The price target's important, but the structure is even more important. So I want to break that down so you can see exactly what some of the possibilities are here. I'm getting into a little more of a intermediate viewpoint on the markets tonight, going away from the day-to-day things that I do normally. So let's discuss this structure, and this has been somewhat eating at me for a while. Now let's dig into the original analysis that I made back on April 30th. We had this sharp move down, and this was a simple ABC pattern. There were no 5 waves in that decline on a weekly basis, which tells us that the probabilities now are that we're going to see an ABC up. This would be the A, B, and then this is C. And I'm not going to do the math, but I will do it over the weekend. So if that's the case, and now we've got a massive, right here, this bar right here is a massive reversal pattern. And now we're seeing some follow through. If we close below last week's low, this is going to be significant because it's going to confirm that outside reversal bar. And then we're going to get a potential for a 2 to 3 week pattern to set up. And that will confirm what I was talking about. So a couple things are going to happen with the moving averages. This moving average is going to continue to go up at an angle, but it is starting to flatten out. And this average is more likely going to roll over here. So what if we go through this level, which the PPMs are potentially indicating we will, if we close under last week's low, and if we close under the 40 period moving average daily today, and especially if we close under the 10-week moving average today, which I talked about a minute ago, this will set this pattern up. See that happen? We'll get a rebound. I'm not sure I'm drawing in the exact magnitude, so don't hold me to that. What we should see is a move down into where these moving averages, and this will be the target range in right here, in this range right here will be the target range which is going to set us up to around 3170 or so on the downside. This is what matters right now, is that we likely to see some follow through under the markets, a slight bounce, and then another decline, which would set us up for probably going into that 4 to 6 week pattern and most likely bring us right smack into the election. For right now, short-term models are 100% in cash, as I talked about. Intermediates still have a lot of holdings, and they're going to continue to hold for the next several weeks. So most likely this consolidation I have up here is going to be what will happen. Reviewing the Nasdaq futures, so far there's been a high tonight of 11,295. R1 is 11,288, so we've traded just through that R1 number. Just like in the S&P, we're likely to see possibly an R2 number. I think we could stall right here, but also the 40 period moving average on the Nasdaq will be significant as well. 11,265. We're trading just above it right now, just like with the S&P. So a close under that number, 11,265, will set the tone to move toward the lower end of the grid on the daily basis, which will suggest at least a 10,009. The extreme is 10,643. That could happen today because we do have the machines out there running with the S&P range trading around 100 handles a day. Along with that 40-day moving average, the 10-week moving average, 11,134. So we're trading just above that. The 40-day moving average and the 10-week moving average are somewhat similar. And so we're looking at those key numbers. If we close under last week's low, which is the 11,129, that would be negative. And also if we confirm that by closing below the 10-week moving average, then that would tell us that we're likely to go down, also down to a minimum value of 10,259. It's rising about 100 points. So it'd be about 10, we'll call it 10,350 to 10,400 on the downside will be the support. That number will be where it's likely to see that bounce that I set up on the chart that I was just showing you on the S&P. The final market that I'll cover tonight is gold. We continue to waffle around these moving averages. I've talked about this 1954. We did get a close above that. Yesterday we closed at 1964. We're back under that number. We're at 1952 right now overnight, which is exactly where the 10-day moving average is. And a close under that level would suggest we just continue in this sideways range. The trend in gold is sideways and working this range. 1960, maybe 1980 would be the extreme. We're going to remain in this trading range for a while yet, and there is some vulnerability for this thing to roll over. The numbers that are important are 1908, which was last week's low, and then below that we could go all the way to 1849. Most likely scenario is we'll stay in a tight sideways range, could trade down a bit lower to 1939. The low overnight's been 1944, maybe 1932. STX might be on the downside. A lot of this has to do with the relative strength that's been showing up in the Dow. I did cover that 2 nights ago, and those parameters are still valid. In fact, we got a short-term buy on the WaveTech models on the Dow. So that's likely to continue to move higher. This will keep some relative pressure on the gold. This will complete the video for tonight. Everybody have a great weekend, and we'll talk to you on Sunday night. Thanks again for watching.